Santa Claus rally skip. Well, this is something that everybody's talking about because we are expecting a Santa Claus rally and it didn't come. And in fact, today is a very important day. It's the first trading day of the year of 2025. Happy New Year. And if the market continue to sell, this is going to be a very, very damaging one for this year for 2025. So in fact, S&P may really drop to 5796 level. I'll tell you more because Janet Yellen is getting very worried right now. Now, first of all, make sure that you do your own risk management because at the end of the day, it is about your own portfolio. Now, the LEI increased in November 2024 for the first time in 2 years. That was a bit good, but apparently itself, if you look carefully, guys, we have to take notice of something big. Every time when there's a crossover, you can see right here. So whenever there's a crossover, okay, you can see over here, okay, you can see over here, okay, we do have a recession. And the thing is this, we have this crossover since 2023 and it didn't happen. So is it because there's no recession? No, in fact, it's being pushed back. So that's why now many experts are weighing in right now that could be a recession, but it's going to be a mild one. But the thing in Britain, we saw the thing happening. So while Goldman Sachs is expecting the market to continue to rally for 2025, well, apparently Jim Paulson actually says that there will be a pullback soon. So what do we get from here? To me itself, I'm a guy who believes in numbers. And end of the day, if you see all this thing happening right now, whereby you can see every time when there is a crossover to the downside, is a recession. So I believe that 2025 we will see a recession. Okay, I'll be very, very clear here itself. I believe that's going to happen. Although Santa Claus rally is supposed to have, make things smoother, but apparently it's not happening. And if there's going to be no Santa Claus rally, then usually the year itself is not going to be fantastic. All right, so average year with a rally is up by at least 10.4%. But if it's not, then you need to be careful. Okay, so the thing is this, while we're on a negative side, Tom Lee, as usual, is so bullish. In fact, on December 30th, he says that it's a buying opportunity right now. But we all saw what happened in the stock market all coming down, right? So what his reason? He feels that, right, this is just a normal pullback. And in fact itself, 2024 was the same thing. There was some weakness, and then it was a buying opportunity, and all this happened again. So to him, everything is good. All right, there will be a drop in the cost of business, and the general annual spirit given by the White House and Senate should be able to propel the market higher. Now, I'm not going to go against him because I also think that the market will recover. But the thing is, I just feel that the current optimistic by the boys a little bit high. Like you can see these S&P targets for 2025, Morgan Stanley 6,005, Barclay 6,006, and Bank of America is a crazy number. They gave 6666. So this is a very bad number in opportunity, in my opinion. By Deutsche Bank, wow, 7,000. And of course, Oppenheimer, 7,100. So all these are very high numbers for the year itself. Because at the moment now, we're at a about 5,900 to 6,000. So they're looking at another 10% upside. And we all know that they were all wrong for 2024 at the start of the year. So I believe that we may see something similar. Jeremy Segal says that the market rally will take a pause for 2025 with a chance of a 10% correction. And I totally, high-five on this because I believe that the S&P will drop by at least 5 to 10% in the coming few weeks and months. Because he also reminded everybody that it's the second time in history, the S&P have rallied 20% for 2 straight years. The first time was 1998, all right, whereby and we have 999, the market rallied, and then we have a dot-com bubble burst. So the thing is this, right, this is the second time this is happening, and of course the last time when the dot-com bubble burst, it was on technology, and now we also had the same thing. It was technology raising up and AI pushing the market right now, so it could be the same thing happening, and it's going to be a pullback. I think it's really possible. So with all these numbers coming in, I look at the stock itself, the 7 stock that are responsible for more than half of the S&P gain last year. And of course, these stocks will be very important. Take note of all these names. So when the market pull back by 10 to 15%, I think that is where you can go in to buy some of these stocks. But at the moment right now, I don't think you should be chasing after it because you must understand a very important history is that when that happened itself, it was all the way back, to this 1929, whereby the market cap is the largest for the stocks, 75% of the stock itself, and then that was where the market pulls back. So when you have all these big stocks, holding the market, so once they pull back, the whole market will get hit. So that is the reason why you need to be very, very careful, because I think that this may actually trigger a tsunami of selling when the big boys really dump. And of course, if you look at the S&P right now, it's trading at this number. Let me bring to you now. It's trading about 5,888 on the CFD side. So a 5% pullback will be 57.96 level. All right, there's something that you must take note. I think that will be a number that the market will be going for this week. All right, and then after that, it may stay there for a while. And if the market bullish is there, it may stage a rebound. But if the market fail and the market start to sell, then of course the next wave can bring it down all the way to 54.91. And of course, when that actually happens, that will trigger a lot of query, because this is like, hey, where's the rally? Because all the big boys are all looking at 6,004 to even 7,000. If the S&P do fall to 54.91, then of course there will be some heavy selling. So take note of these two numbers. Now, one thing to note, I mean, keep on stressing, is the 10-year yield. The 10-year yield is the one that is heavily weighing down the market. And as I said, if the 10-year yield is going up, the bond market is going down in dollar price. Hence, therefore, that means people are getting worried about the US economy. And of course, main reason is Federal Reserve indicated that this could be a chance for 2025 to lower down the pace of the interest rate cut for this year. And of course, the other one is that people are asking, maybe inflation is going to flare up again, and it is actually going to increase. You may have this people worry about the confidence of the market. So one thing to note, we all know that stocks and bonds are traditionally inversely related. So when bond return goes up, usually stock market comes down. So do take note of that, but it's not like every time this happen. Okay, so one thing to note, there's something that I want to share on the next video, is the crude oil. Now, if crude oil prices really go up during this period of time, it's going to be very worried, because that will bring in the inflation worry, because we are seeing now that in US, you see inflation is really going up. And when that happens, the economy is not doing well, you're going to hit a very big problem. So if this, we must understand why is that so. Because in Biden, when he came in as a president, he spent a lot of money as a Democrat. And we do know that Donald Trump also spent money. So when everybody has to spend money, so that's going to hit back the treasuries. And Yellen says that the treasuries to hit a new debt limit by mid-January. And that is what's the reason why people are worried. And of course, she's saying that, right, they may need the special accounting maneuver again to avoid the breaching of the US debt. Now, the thing is this, when all this is happening, people are kind of worried. They're very worried what will happen next. And of course, we look carefully into history. We do know one thing very important. I want you to focus here yourself. Whenever, okay, you can see that the yields goes up. Okay, the yields goes up. Let me just change the color to make it easy to see. The stock market dive. Okay, so it's going to be very important. So that the yields start to go up in this manner, stock market really come down by 5 to 10%. So with this important information itself, we can see that the yield has been surging, as you can see, and that is why the stock market is coming down. And I believe that the next breach will be 4.65%. I said this in the video, and I believe that this can continue. And of course, if the market really come to about 4.75%, then of course you can notice something important is that now the stock market is trading lower. You can see that right at this junction here itself is at 4.72%. The stock market is trading somewhere around here, but now the yield is only here, and yet the stock market is somewhere similar. So which means that we know that what will happen next if the stock market the yield really come to 4.75%, stock market could be shooting down to this point here, and that will give you back somewhere about 41,000 level. So 41,100, in fact, write it down for you. 41,500 will be the target level for me for the next few weeks to months for the Dow Jones. Something that we need to really take note. And hopefully, for those who are short in the market, you make the money. And for those on long the market, just wait a while, let the market hold on, because it's very clear that the US debt by the foreign central bank are all repatriating. Okay, they're really getting out, and you can see very clearly that they're no longer holding the US bonds, and that is not the sign that what US wants. And of course, gold is increasing at the same time, so that's why buying gold will be a good choice. And last but not least itself, you must understand now we are at crazy times. The US stocks at 3-time deviation. This is standard deviation is 3 times. This is really a crazy level, so you need to be very very careful, okay? It's 3 times standard deviation, okay? It's something very, very crazy. And of course, if you look at the chart, the long term, you can see very clear that we have a very good, we have a very good extrapolation of the chart technical, and that's why the market top. Beautiful, right? So the thing is this, based on the head and shoulder reversal, we've already hit the shoulder, hence therefore this thing should be able to come back to the neckline, and that's again the same level at 41,600 to 500 series. So with that, overall, I'm pretty confident that we will see 41,500 in the near term. And of course, again, we've got Santa Claus coming in this time round, and we have the market breadth so low at this moment. I really believe that we really may see 41,500 coming in soon in the next few weeks. All right, guys, I hope you like this video. It's pretty informative. I think that you're going to benefit from this and hope that you make good money from the market. All right, with that itself, I want to show you the big chart here to show you how the real thing is moving, and that is where we are looking at to happen. Okay, all right, guys, thank you so much for watching this video, and I wish you all the best for 2025. Take care and have a great time. This is Kel signing off. Bye bye.